Welcome back, traders, to another episode of Learn to Trade on ChartsEmpire Trading Institute. In this section, you will learn in detail about balance, equity, margin, free margin, margin level, commission, and swap. If you take the time to carefully study this video from beginning to end, you will gain an in-depth understanding of how to implement the information in this tutorial and make informed decisions in your trading activities within the financial market. Right, with that being said, let's get started. Depending on the trading platform you utilize to trade in the financial market, you will usually get access to balance, equity, margin, free margin, margin level, commission, and swap at the trade terminal of your trading platform. In this tutorial, I will make use of the MetaTrader trading platform. MetaTrader is one of the leading and most used trading platforms by beginners traders in the financial market. I have a full tutorial on everything you need to know as a first-timer trader on the MetaTrader trading platform. Refer to the description of this video or click on the info card here at the right top of your screen to watch the tutorial. 1. What does the balance on your trading account terminal mean? The balance on your platform is the funds or cash amount of money that is currently available in your trading account before taking into account any open positions. As you can see on this balance account, my trading account-based currency is in USD. Account-based currency means the primary currency of your account as specified in your account opening with your brokerage firm. If you like to have a live or demo account balance in another base currency such as GBP, Euro, or maybe in your local currency, you will need to open an additional account with your preferred base currency on your brokerage firm's official website. Your balance account will be static and will only increase after closing an active position in profit or will decrease when you close a position in loss. 2. What does the equity on your trading account terminal mean? Equity refers to the cash amount of money a trader has in their trading account, plus or minus any profit or loss from open positions. Unlike the balance, the equity is not static, but will fluctuate as your unrealized position moves in favor or against the direction of your anticipation. If your equity is higher than your cash or account balance value number, then it means the estimate of your unrealized open positions on your trading account is in profit. And if your equity is lower than your cash or account balance value number, then it means the estimate of your unrealized open positions on your trading account is in loss. Therefore, your equity equals to your account balance plus your current negative or positive unrealized open positions plus positive or negative swap minus your broker's commission. We will talk later on why swap could be positive or negative. Take note, your broker's commission will usually be in zero or minus. 3. What does the margin on your trading account terminal mean? Margin is the amount of money you need to have and maintain in your account to cover any active open positions. Margin can also be perceived as a commitment. When trading, you are only required to provide a small amount of capital to open and maintain a new position. This capital is known as the margin. For example, if you want to buy $10,000 worth of an asset, this asset could be currency pairs in the forex market, shares in the stock market, or any other CFDs. You don't need to provide the full amount. You only need to provide a portion like $1,000. The actual amount depends on your forex, stock, crypto broker, or CFD provider. As I said, margin can be perceived as a commitment, assurance deposit, or collateral that's needed to open a position and keep it open. It is an assurance that you can afford to hold the trade until it is closed. Therefore, margin is simply a portion of your funds that your broker set aside from your account balance to keep your trade open and to ensure that you can cover the potential losses of the trade. Margin is not a fee or a transaction cost. It is just a portion of your funds that is locked up for the duration of holding onto a specific trade. Once the trade is closed, the margin is released back into your free margin account and can now be usable again to open new trades. Take note, the margin value does not fluctuate. It is static during active opened trade position. Likewise, the margin section will be absent whenever you have no active opened position. Since there is no active opened trade position, no commitment is needed. Finally, don't be confused when you hear the phrase required margin. Required margin simply means margin. On every position you open in the market, there will always be an allocated required margin amount that will be needed to be preserved for each particular trade. Required margin is also known as deposit margin, entry margin, or initial margin. 4. What does the free margin on your trading account terminal mean? Free margin is the unused or available margin on a trader's trading account that can be used as collateral for trading. Your free margin account can be thought as a savings account for emergency. Mathematically, free margin is the difference between your equity and used margin. Take note, your used margin is your margin account, while your usable margin is your free margin account. Therefore, on every position you open in the market, there will always be an allocated required margin amount that will be needed to be reserved or subtracted from your free margin account. Now, there is a question for us as a trader. What if your account balance falls below your margin requirement? What will happen? Your equity is used to determine your margin call. As soon as your equity equals or falls below your used margin, that is your margin, you will receive a margin call. For as long as your equity is greater than your used margin, then you will not have a margin call. Therefore, if you receive a margin call, there are 3 options available for you as a trader. Option 1, close one or more of your open positions in order to reduce your initial margin. 2, deposit funds to your account to maintain the open positions. 3, move funds from another account into the margin account. Therefore, if you don't have enough funds in your account to cover a potential loss, your trade may be placed into margin call. On most trading platforms, once the margin level of your account reaches below 100%, a margin call notification will be sent to inform you that your equity is no longer sufficient to hold your existing trade. Brokerage firm can automatically close your positions if the margin level falls below the minimum percent in order to maintain the required level on their trading platform. 5. What does the margin level on your trading account terminal mean? Margin level indicates the health of your account. It is the ratio of equity to margin calculated by the following formula. Equity divided by margin multiplied by 100 equals to your margin level. It is indicated in percentage. Let's calculate the margin level for this trading account. As you can see, the equity is 98,829.52. The margin is 988.70 multiplied by 100, which is 9,995.93%. For a better understanding on how margin level is being derived, let's make another calculation. For instance, if your equity is $1,000 and your margin is $20, that means margin level equals to 1,000 divided by 20 multiplied by 100. $1,000 divided by 20 equals to 50. 50 times 100 equals to 500%. 6. What does the commission on your trading account terminal mean? Commission is the charge levied by an investment broker for making trades on a trader's behalf. Levels of commission vary between different brokers, depending on the asset being traded and the type of service being offered. Looking for a low commission brokerage firm? Check the recommendations in the description of this video. 7. What does the swap on your trading account terminal mean? Swap is the charge applied to the nominal value of an open trading position overnight. Swap has no effect on day trader because day traders do not hold on to their position overnight. Day trading involves closing an open trade in profit or losing position before the end of the daily market trading activity. However, it has an effect on swing traders. Swing trading involves holding on to trade overnight. Depending on the swap rate and the position taken on the trade, the swap value can be either negative or positive. In other words, you will either have to pay a fee or you'll be paid a fee for holding your position overnight. Can you make money from swaps? The most popular way to profit from swap rate is the carry trade. You buy a currency or an asset with a high interest rate while selling a currency or an asset with a low interest rate, earning on the net interest of the difference. As you can see on this open position here, I have a negative swaps and positive swaps. Is swap good or bad in trading? Well, it can positively or negatively affect profits depending on the swap rate and position you take on the trade. This means traders will either have to pay a fee or will be paid a fee for holding the position overnight. As you can see on this account right here, I have minus $1.30 on the trade on sugar, and I have plus 1.66 cents on UK 100, and I have minus $15.63 on the trade on British pound sterling paired against the New Zealand. Why is my swap negative and positive? Negative swap is a situation that occurs when the high interest rate of the central bank issuing the base currency falls short of the interest rate of the central bank issuing the quoted currency or asset, while a positive swap is a situation that occurs when the high interest rate of the central bank issuing the base currency exceeds the interest rate of the central bank issuing the quoted currency or asset. For more information on base currency and quoted currency, check the description of this video. Remember that choosing the right brokerage firm is crucial for successful trading. Use the link in the description of this video to check out my recommended brokerage firm today. I hope this video was useful for you. If it was, please kindly hit on the like button, share, subscribe, and comment your views. You can also suggest any topic you want us to treat in the next video. But to suggest a topic, you need to be a subscriber on this channel. It is free to subscribe. Just tap on the subscribe button and enable the notification bell. That is all. For additional information on daily and weekly trading setup ideas, more trading tutorials, mentorship service, and to attend my Tri-Weekly Traders webinar, check out the links in the description of this video. See you in the next video. More profits.